Got a big list to cover, so let's start it off real quick. If you woke up this morning and your Viagra bottle was empty, you know where it went. Tesla had a massive boner. I mean, look at this. It went from limp to pimp. It was crazy today, but look for resistance at 12.1648, which would be the perfect gap fill, and then just look for a correction or a pullback to that level to hold it as support if you want to see it push up. If it does fall below that level, then you want to see if it does hold the bottom of the gap as support or if it's going to look for it as a level of resistance and then pull back further. Lucid, of course, running up in sympathy with Tesla. Look for a resistance or support at the $42 level if it goes above it. Then you want to see if it breaks above this green line at $44. It has been a level of resistance before, so we want to see if it does finally get above that. AMC has been losing some steam, but then again, you want to see how it's going to react to the $26 level. You can also see that it has already double bottomed around this area. So I would think that there is going to be a push up, but I do want to see if it does pull back, retest that 26, consolidate for a while, and then push up from there. Bito, aka Bitcoin ETF, already has 2878 retested 4 times as a level of support. So I do think this is the bottom and it is going to push up from here. Plus you do have this gap to fill above here in the purple box. So I do have a feeling that this is the bottom and it is going to start going up. Hood is really having a hard time breaking above the 200-day moving average, which is right around the $19 level. So I'm waiting to see if it does pop above and hold above the 200-day moving average before taking a long position on this. Bbio, even though I'm not a big fan of taking a position in a biopharmaceutical company, this one did have a massive short report, which did have it tumble, huge. And it does have a massive gap to fill up to $40. But you can see here 1750 is a level of resistance that it does need to break. It could still drop down below, but you do have my favorite pattern, which was in play, although now it is already over that, and the 50-day is below the 20, so it could still pull back if it does not break above 1750. If it does break above 1750, look for a solid run, obviously to $20 first, but 25 where the 200-day moving average is going to be the highest that I think it's going to go. If it does hit that 200-day moving average, expect a pullback and then maybe consolidate before pushing up higher. Or once again, if it does not break 1750, you could look for a pullback to about $15.